move on and talk about MCX, that is making silver trading more accessible with the launch of a 100-gram silver futures contract, and the move in fact is lowering the entry barrier for retail investors and small jewelers, widening participation as well in a market that traditionally is largely dominated by some of your larger players as well. Let's try and understand the impact of this and the need to really bring in this particular measure. In fact, Shivanshu Mehta, HOD, Bullion, MCX joins us on the show right now. Mr. Mehta, thank you so much for taking time out and joining us, and a very good afternoon to you. First things first, just wanted to try and understand the rationale here when it comes to the Silver 100 contract. What was the thinking here?
Yes, in fact, MCX already has a leadership position globally in terms of commodity options and futures, and it also serves the domestic risk management, need for the value chain, and the prices are used as a benchmark. So hence, as advised by our product committees, to make risk management more accessible and more fine-tuned for the smaller dwellers as well as the retail investors, to arm them with an organized investment tool as well, if they so desire to take delivery. We decided to launch the Silver 100 grams futures contract, and it only adds further impetus to our existing portfolio, which has a 1 kg, a 5 kg, and a 30 kg silver contract, all of which actually are used intensely by the industry for risk management across. And also, we've recently we already have 4 domestic refiners in silver, and the focus on the lowering the import dependence as well as increasing the recycling is also something which we are working with, and this ultimately will also help serve that objective. Yeah.
That makes perfect sense in terms of what it's positioned against. So just to recap for our viewers, the key benefit here, the key sort of aim that you're looking at is to reach out to a wider audience, right? With the help of this, so smaller jewelers also come in that ambit. You do have a smaller, segment also that really gets tapped through this, right?
That's right. Absolutely right.
No, absolutely. And also just in terms of yeah, go ahead.
What I wanted to also add here is that we've seen a trend of our smaller denomination contracts finding liquidity into the far out months, which means that there is a latent need which we need to serve for the smaller hedger segment as well as for the retail investors, because these contracts also come with a delivery arm if somebody so desires to take delivery. Yeah.
Absolutely. And against the entire backdrop of volatility as well, is there anything else that you're looking at as well that's in the works when it comes to not just this contract, but to others as well? Is there anything that you're looking at in terms of the liquidity, the volatility that really is very much on the table right now? Is that a concern that you're looking at right now?
Yes, in fact, volatility is something which options are an ideal instrument to address. And we've seen a rapid, usage by the value chain of silver in our options contracts, as evidenced in the way the turnovers have actually gone up over the past year by around 5 times in the FY 25-26. So options and its awareness about its use cases is something we work with continuously with the Apex jewelry associations across the country, as well as the regional ones, so that people become aware of how to use options as a risk management tool, an efficient risk management tool, along with the futures. So that is a trend which we are already observing. You're absolutely right.
Absolutely, and thank you so much for helping us out to try and understand that as well. But just also wanted to try and understand if among the existing product suite that you've helped us identify as well, if the 30 kilo benchmark is that the benchmark that you look at when it comes to silver trading?
Yes, internationally, the silver bars of 30 kg denomination are what are traded in the international, interbank market, as well as the physical, the refiners, they make the 30 kg bar the most. So that is a benchmark, which is what we have launched years back. And as we grew along, we realized that, we can be fairly more innovative, and it has worked well with the 1 kg silver bar, which forms the basis for our silver 1 kg and 5 kg contract, that found tremendous salience, with the retail investors as well as the hedgers. So in keeping with that, while the price benchmark continues to be the 30 kg bar, but then these contracts further increase the spot to futures integration whenever they are launched in various denominations.
No, absolutely. And I just wanted to try and understand, based on the initial response that you're seeing in, or everything that you're factoring in right now, what is the initial response that you're also penciling in at this point in time? What's the kind of retail response that, you're factoring it in right now?
Yeah, thanks for asking that. I think when I last saw a few minutes back, we had done more than 4,000 lots of silver, 100 futures contract on its first day in a few hours. So that seems to be taken up well by the market, and a good open interest buildup is also observed. So let's see as the day goes along. Yeah.
Absolutely, and thank you so much for providing us that initial picture as well. Lastly, just wanted to try and understand in terms of some of that boost really coming in for the domestic refining and recycling as well. You do have the launch that coincides with the MCX's updated good delivery norm silver as well. So you do have domestic silver refiners that are really going to get impaneled here as well. So coupling both of these right now, what are you then penciling in terms of the reducing India's dependence when it comes to silver imports?
Yes, we are definitely aligned with that vision, and MCX was the first to bring up the MCX good delivery norms in gold for the domestic refiners, and which has helped recycling. It has helped lowering the import dependence, and also removing disparities in prices because of the recycling of jewelry and scrap. So we've seen close to 20 tons of gold of Indian origin refined and delivered via contracts. So in keeping with that, silver, we already have 4 domestic refiners, and we've issued a circular a couple of weeks back where we've invited more domestic refiners. So we want more recycling to take place in silver, and hence improve the spot to futures integration as we go along. That would, whenever the expansion takes place, that would be applicable to 1 or more contracts of silver. Yes.
Fair enough. Thank you so much for taking time out and joining us and helping us understand what this really means and what kind of markets can this really tap into. So there you go. That's MCX talking about how they're expanding their silver portfolio as well. And in terms of what this is going to be doing, which are the segments that would get tapped into? Of course, the 30 kg is the benchmark, but you do have a whole host of categories that stand to get covered right now. Let's also move on and talk about another interesting update. In fact, the SEBI could ease norms when it comes to debt brokers with a rethink on net worth and compliance requirements. The move is coming in